Hello viewers, welcome to my channel. I'm Hasham Ali Khan. In this video, I'm going to continue the theoretical part of cash flow statement. In the last video, I have explained you the meaning of the term cash flow statement. What is the importance? What are the limitations of cash flow statement that I have already explained in the last video. In this video, the differences between funds flow statement and cash flow statement and the rules regarding the preparation of cash flow statement according to AS3. The meaning of cash, cash equivalent, cash flows, then operating activity, investing activity, financing activity. All these things I'm going to explain in this video. So without understanding the theory, you cannot be able to understand the problems. So before doing the problems, you have to concentrate on the concepts which are used in cash flow statement. That's why watch the video till the end, don't skip in between. And I suggest you, before watching this video, first of all, you watch the first video on the meaning of the term cash flow statement. Go to the playlist of my channel, select the subject accounting for management. Select the video of cash flow statement. Be clear regarding the concept, meaning, need, importance, etc. So before starting the discussion on this topic in this video, take the screenshot of the points which I have written on the board. Then I'll explain all the points in detail. First of all, very frequently in examination, a question will be asked, what are the differences between funds flow statement and cash flow statement? So there are many similarities and also differences between this funds flow statement and cash flow statement. Both the statements are prepared from the same data. From the same data, we can prepare either funds flow statement or cash flow statement, but the purpose will be different. So here, a cash flow statement is very similar to funds flow statement. Many similarities. Both statements are prepared from the same data and are vital statement in understanding the financial position. So in order to understand the financial position of the business, we require funds flow statement and also we require cash flow statement. Now the following are some of the differences. Now one by one difference we'll discuss on difference between funds flow and cash flow. A funds flow statement is based on working capital concept, whereas cash flow statement is based on cash concept. First of all, in funds flow statement, the meaning of the term fund is working capital. Working capital means the difference between current assets and current liability. So working capital is equal to CA minus CL. That is working capital. The funds flow statement, the meaning of the term is working capital. Whereas in cash flow statement, the meaning of the fund is only cash. Only cash. So in this way, the funds flow statement is a broader concept which explains the changes in working capital. Whereas in cash flow statement, it explains the changes in cash. Next, second one, the funds flow statement is based on accrual system of accounting, whereas cash flow statement is based on cash system of accounting. First of all, there are two systems of accounting, accrual system and cash system. According to accrual system of accounting, all expenses and incomes of the current year should be taken, whether income is received or not, whether expenses are paid or not. That's why all outstanding and prepayments will be adjusted in accrual system. So funds flow statement is based on accrual only. It will not see whether cash is paid or not. It will take all expenditure of the year. Similarly, whether income is received or not. If the income is of the current year, we will take all the income. That is in funds flow, accrual system. But cash system of accounting, we consider only cash. If cash is received, we will account. If cash is paid, we will account. This is called cash system. So simple words, funds flow statement is based on accrual, cash flow statement is based on cash system of accounting. Next one, a funds flow statement is useful in planning intermediate and long-term financing. A business organization will make long-term financing plans, medium-term financing plans, short-term financing plans. So for making medium-term and long-term financing plans, funds flow statement is suitable, is better. Whereas in case of short-term financial planning, cash flow statement is better. Next, a funds flow concept is a broader concept which explains the changes in working capital. The funds flow statement will consider fund means working capital, and working capital includes all current assets and current liability. So it will give a broad perspective of the working capital, whereas cash flow statement will consider only cash, and cash is a part of working capital. In the whole working capital, cash is only a part. So in cash flow statement, we focus only on cash, whereas in funds flow statement, we focus on working capital, which includes all current assets and current liability. Next one, a funds flow statement does not adequately analyze the very short-term solvency position of the business. This funds flow statement will not disclose the very short-term solvency position of the business. Many a time what will happen, in the short run, the business appears to give more profit, but still the business is facing cash crunch, because whatever profit is there, that does not mean profit is equal to cash. Many a times profit will be huge, but the business is suffering from liquidity problem, cash crunch problem. This may happen. Next, a statement of changes in working capital is prepared along with funds flow statement. When you make funds flow statement, two statements you have to make. The first statement, statement of changes in working capital. Second statement, statement of source and application of funds. In this way, in funds flow statements, two statements. One statement of changes in working capital, one statement of source and application. Whereas in cash flow statement, we will make only one statement. No separate statement for working capital. Only one statement, cash flow statement will make. So these are few differences between funds flow statement and cash flow statement. Now the next topic is regarding the preparation of cash flow statement. How to make the cash flow statement. Remember, cash flow statement is a very important financial statement. That's why in India, Institute of Chartered Accountants of India, ICAI, has issued an accounting standard named AS3. Accounting Standard 3, which deals with the preparation of cash flow statement. How to make the cash flow statement, this AS3 has specified. Now the statement deals with the provision of information. This statement, AS3, deals with the provision of information about historical changes in cash and cash equivalent. It is not saying only cash as well as cash equivalent and of an enterprise by means of cash flow statement. So this accounting standard says that provision of information about the historical changes in cash and cash equivalent, which classifies cash flows during the period from operating, investing and financing activity. So this accounting standard says this statement, cash flow statement, deals with showing the changes in cash and cash equivalent during a period of time, showing clearly the cash flows from operating activity, investing activity and financing activity. That's what this accounting standard AS3 says. Now, meaning of cash, cash flow, cash and cash equivalent. The cash flow statement provides information about the historical changes in cash and cash equivalent, classifying the cash flows into cash flow from operating activity, cash flow from investing activity and cash flow from financing activity. Now, what do you mean by cash? Cash means hard cash, cash in hand, and also cash demand deposits in bank. There are different types of deposits in the bank, like fixed deposit, recurring deposit, current deposit, saving deposit, etc. But demand deposit means our money is lying with the bank, at any time we can withdraw the money. That is called demand deposit. So cash includes the demand deposits in bank. So cash in hand and demand deposits in the bank, that is called cash. Now what do you mean by cash equivalent? These are the short-term, highly liquid investments that are readily convertible into cash. Cash equivalent are short-term, highly liquid investments. That means a company, a business has invested some money, some funds in purchasing the shares or securities. And these securities are such that easily we can convert that security into cash without any lapse of time. Easily we can convert the security into cash. That is called cash equivalent. Now cash flows. When we say cash flow, it means cash inflow and also cash outflow. So inflow and outflow both combined together, it means cash flow. Now AS3, Accounting Standard 3, has classified all the activities of the business into 3 categories: operating activity, investing activity, and financing activity. This information is very much needed because without understanding this, you cannot be able to understand the preparation of making the cash flow statement. All these are the foundation stones for making the cash flow statement. So, first of all, operating activity. The principal revenue generating activity of the business are called operating activity. Every business is concerned with the main activity. Example, a business which is concerned in purchasing and selling cloth. The main activity is buying the cloth and selling the cloth. So all the cash flows involved in buying the cloth and selling the cloth are called operating activity. Similarly, a company is engaged in steel, purchasing the steel and selling the steel. So all the activities relating to buying the steel and selling the steel, all the cash inflows and outflows relating to buying the steel and selling the steel, that is called operating activity. So simple words, the main principal revenue generating activity is called operating activity, right? In other words, we can say all the activities other than investing activity and financing activity are called operating activity. Now examples of cash flow from operating activity. So what are the different examples which give the cash flow from operating activity? First one, cash receipt from the sale of goods or rendering of services. A business will sell the goods or a business will provide the services. So all the revenue generated in selling the goods or rendering of service is called revenue from operating activity. Secondly, cash receipt from royalties, fees, commission and other revenue. Apart from selling the goods, a business may receive royalty, fees, commission like this. These are also called operating activities. Then cash payment to suppliers for goods and services. When we sell the goods, before selling we have to purchase the goods from the supplier. So when we purchase the goods from the supplier, we have to make the payment to the supplier. So payment made to supplier again will come under operating activity. That means selling the goods and purchasing the goods. Amount paid for purchasing the goods, amount received on selling the goods, both are operating activities. Next, cash payment to and on behalf of employees. The business is run with the help of employees. When employees' services are taken, the amount has to be paid to employees in the form of salary, remuneration. All these are operating activity. So these are few examples of cash inflows and cash outflows in operating activity. The next activity is investing activity. Investing activity is concerned with purchasing or disposal of fixed assets. Every business will use a number of fixed assets like machinery, equipment, furniture, building, vehicles. All these are the fixed assets, non-current assets. So any amount invested or purchased, amount paid for purchasing the fixed asset, that is an investing activity. Similarly, if any asset is sold, sometimes an old asset is sold away, disposed of. The amount realized on disposal of fixed asset, that is an investing activity. Simply acquisition and disposal of fixed asset, that will come in the investing activity. Examples of cash flow from investing activity: cash payment to acquire fixed assets, cash payment to acquire or to purchase the fixed asset. Secondly, cash receipt from the disposal of fixed asset. We are purchasing fixed asset. Sometimes we have to sell the fixed assets. If the asset has become outdated or damaged or old, we will sell it off. The amount realized on sale of fixed asset is an investing activity. Then cash advances and loans made to third parties. Sometimes a business will give the advances to third parties. That is also investing. And cash receipts from the repayment of advances. Whatever advances the company has given, the business has given to third parties, there is a repayment of that advances. That will also come under investing activity. Now last is financing activity. Three activities: operating activity, investing activity and financing. The financing activity are the activities that result in change in the size and composition of owner's capital and borrowings of the enterprise. Remember, every business, the investment will be made by the owners and the lenders. The business will raise the money from the owners or the business will borrow the money from the lenders. Example, if the company has issued the shares, the shareholders are the owners. The company has raised the funds from the owners, shareholders. That will come under financing. Similarly, a company may issue debentures. Debenture holders are the lenders. They are not the owners. They have lended the money. So the company has borrowed the money from debenture holders. Similarly, a company will borrow the money from the bank. So these financing activities are those activities which are concerned with the changes in the size and composition of owner's capital and borrowing of an enterprise. Now, examples of cash flow from financing activity: cash proceed from issue of shares and other similar instrument. The company will issue the shares and raise the money. So the proceeds received on issuing the shares or any other similar instruments, the money received will come under financing activity. Second, cash proceeds from issuing of debentures, loans, bonds, etc. The company has borrowed the funds by issuing the debentures, bonds or other securities. That will also come under financing activity. Next, cash repayment of amount borrowed. Earlier the company has borrowed the funds, now the company is repaying the amount. Repayment of loan, that will also come under financing activity. Then share issue expenses of underwriting commission, etc. The company will pay underwriting commission, etc. That will also come under financing activity. Payment of interest on debentures, loans, etc. When the company pays interest on debenture or interest on loan, that will also come under financing. Lastly, payment of dividend on preference capital and equity capital. When the company pays the dividend, whether on preferential capital or on equity capital, dividend paid will also come under financing activity. Last one, note. Cash flows arising from operating, investing or financing activity may be reported on net basis. Net basis means we have to set off the cash inflow and cash outflow. Example, in case of investing activity, there is a purchase of fixed asset 10 lakh. So cash outflow is 10 lakh. Similarly, one old machine was sold for 1 lakh. So there is a cash inflow of 1 lakh on selling the fixed asset. By selling the fixed asset, the company got 1 lakh. By purchasing the new fixed asset, there is a cash outflow of 10 lakh. So we will not show inflow and outflow both. We will make a set off. Net cash flow we will find out. So 10 lakh rupees outflow, 1 lakh rupees inflow. So deduct 1 lakh, net amount 9 lakh rupees is the outflow. In this way, the cash flows, inflows and outflow will be net. Will be taken in a net form for all the operating, investing and financing activity. That's it. So in this video, I have explained you about the differences between funds flow statement and a cash flow statement, and then different concept. What do you mean by cash? What do you mean by cash equivalent, inflow, outflow? Then all the three activities I have explained: operating activity, investing activity, financing activity. In examination, apart from problems, theory will be asked. Explain about operating activities with examples. Explain about investing activities with examples, or explain about financing activities with examples. So this video will be very much helpful in writing the theory question also. After understanding all these things, it will be easier for you to understand the problems, how to make the cash flow statement. Inshallah, in the next video, I'll start the problems on cash flow statement. So if you are satisfied with my lecture, give a like to the video, share my channel among your friends, among your group, so that more students can watch the video and enhance the knowledge. Subscribe my channel if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah, we will continue the problems in the next video.